Hello, I'm here with Ross Allister, Managing Director and Head of Mining at Peel Hunt. Um, Delighted to have you with us today, Ross. Opening question to you. At Resourcing tomorrow, you're on the panel Urgency Unlocking Mining Financing Exploration. What do investors look for in juniors? What do you see as the biggest challenge for junior miners in attracting capital in the current market?
Thanks, Andrew. It's a pleasure to speak. I think the biggest challenge for junior miners in attracting capital is the lack of patient capital that's available in the market. And I think that's fundamentally, or the markets have structurally changed in the last 15 years. The investors effectively have shorter time horizons and are measured on a quarterly basis relative to benchmarks. That makes it harder for them to deploy capital into mining projects that have longer term time horizons. Fundamentally, mining is a hard business. It's risky, and you need to invest for a long period of time through permitting, drilling, development into production, and there's inherent risks along the way. So a lack of capital deployed into the sector as a whole and risk thresholds for that capital make it hard for investors to make those long-term investments. Particularly in the context of other sectors where you can potentially get more bang for your buck in the short term.
Mm-hmm. And I think also linked to that, obviously, mining companies are also struggling to attract generous investors and into new pools of capital. What strategy do you think would be most effective for broadening the appeal of mining investments to these audiences?
I think there's a fundamental challenge for mining as a sector more generally. And we can come on to it when we talk about differences between stock exchanges themselves, but it's not been an attractive place for investors to park their capital when you've got large liquid tech companies that are performing at exponential rates of growth. And so the competition for capital is fiercer than it's ever been. At the same time, there's less discretionary capital around with investors. There's far more focus on tracking index and index tracker funds themselves as well, which has taken capital out of that discretionary pot. So in terms of what I would advise companies though to do is to stand out, tell a story. Either that's a thematic related to the commodity that you're generating, maybe it's a country story, or maybe it's just the fundamentals of the asset that you have that make your business stand out. Be creative, use the social media, and have a good broker.
Mm-hmm. One thing that we've seen recently is more governments becoming involved in helping junior mining finance, whether it's export finance or whether it's their own pools of capital. What do you think should be the role of government in the junior mining finance sector? And are they doing enough, I guess?
I think one of the challenges globally is that there isn't a coordinated approach in the West in terms of how we address things. Even within Europe, there hasn't been a joined up approach from the EU in terms of how they approach critical minerals and supply chains. And that's almost forced individual countries to create their own investment schemes, whether that's export finance or whether that's direct equity. And fundamentally, I don't think that's positive for the industry because we'll end up competing for assets, not just against countries that we see as having different strategies to ours, but our friends and neighbours. So there needs to be more of a joined up approach between governments. But fundamentally, I think we should welcome any investment into the sector. And that's one of the positive dynamics of the sector at the moment, is that we are seeing more governments are realizing the critical nature of having secure supply chains and having competition versus China in particular on the processing side.
Mm-hmm. Turning to London as a mining finance centre, what are London's sort of major strengths and weaknesses compared to other centres such as Toronto or elsewhere?
I guess the first point I would make is that strengths of individual stock exchange are probably almost as cyclical as the mining sector itself. We always talk about the mining sector being cyclical, but stock exchanges go through periods where they have lots of capital deployed and high valuations and lots of activity in the same way that our sector does. Canada and Australia have always been home to lots of mining companies because of the size of mining relative to their own GDPs and the history of mining in those individual countries. So you're going to have a base of knowledge and a base understanding which is going to exceed most other jurisdictions. That's not to say that those jurisdictions and those stock exchanges don't have their own individual challenges. I think one of the challenges for London, I mean, taking a step back, London is one of the largest stock exchanges in the world and one of the most active stock exchanges in the world. I think it was the fifth most active last year in terms of capital raised, only behind the two New York exchanges and the Indian stock exchanges who had a great year. So there's a massive pool of capital that's available in London. London is also home to a lot of international companies, a lot of international issuers, and a lot of international capital as well. And I'd say there's a greater depth of geopolitical knowledge and the awareness of the risks in London as well. The challenges, though, are clear for everyone to see. That there has been less capital deployed in London. We've exported capital internationally, and therefore fund managers, when they look at deploying capital, they have quite high risk thresholds. The other point I would make is that there's a lot of talk about the New York Stock Exchange outperforming, which it has done, and it's had a gravitational pull on international capital as well. But that's a very tech-weighted index, whereas the UK market has more of a industrial leaning. And the fundamental dynamics of the market that we've seen in recent years have been weighted towards AI and weighted towards tech. We haven't had a global industrial cycle, a proper one, since the period between 2010 and 2020. And even then it was sporadic. It wasn't a consistent period like we had in the noughties. The UK stock market outperforms other international exchanges when you do have those industrial cycles. So I don't think it's necessarily a debate between the merits of a US listing or a UK listing. When you have that debate, it's almost as fundamental as going back to a debate around tangibles and intangibles. Our industry is industrial. It is about extracting real things, and our index reflects that. And so I think when we do have an industrial cycle, then you'll see a reversion to the mean between exchanges. You'll see better valuations, more market activity in London. And everything, regardless of what happens in the US right now, they are focusing on domestic industrial strategy. And that's going to force other Western countries to adopt a similar approach. And you're seeing it in various European and other countries as well. Fundamentally, for me, that's going to drive demand for commodities. It's going to increase investment in industrial companies and in mining. And so actually, maybe I'm clutching at straws, but I think that means that the outlook should be more positive than it perhaps is at the moment.
And one last question. If there is one thing that London could do to improve its position as a mining finance centre, what would it be?
I think we're doing some of the right things in terms of around the edges, changing regulation and trying to encourage pension reform and other things like that. But I do think we are subject to the whims of what investors want to invest in a ever-changing geopolitical environment. If there's one thing we can do to encourage more investment in mining, I think it's just having winning companies, whether that's companies that get investors multiple times returns, whether that's more M&A, which means cash back into investors' pockets. So we just need more success stories, I think, in London, because that's a virtuous circle, which if someone makes money from a mining company, they're more likely to deploy money back into another mining company.
Thank you very much for your time today. That was Ross Allister, Managing Director and Head of Mining at Peel Hunt. Thank you, Ross.
Thank you, Andrew.